The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. Checking in on Bitcoin, the CoinDesk Bitcoin price XTX index currently at $43,397 right now. Bitcoin sliding slightly about 1.4%. The CoinDesk ETX index right now at 3,107. ETH also sliding back about 2.4% over the past 24 hours. The CoinDesk DFX, CoinDesk DeFi index right now at 319, retreating about 4.6%. Joining us now to discuss the crypto markets, Lawrence, who's our next guest?
Oh, yeah. We had some big moves over the past hour, and we had some even bigger moves over the past week. So joining us now to discuss the crypto markets is Scott Melker. He has nearly 800,000 Twitter followers, and he's known as the Wolf of All Streets, and he's the host of the Wolf of All Streets podcast. Welcome, Scott.
Thank you so much for having me. Things have certainly changed since I got the call about an hour ago, right?
Yeah. So come on, what are you seeing over the past hour? Not only that, but over the past week, as I mentioned before, there were some big moves. What's your take on what's going on right now?
It's my opinion that the bottom is likely in, although obviously there's no certainty when trading markets. But I think we saw a lot of signals in the last week, 10 days, 2 weeks, even just emotionally among the community, the language that we were seeing, the sentiment, and that it was likely starting to bottom. I loved last week's weekly candle. If you're looking at it, technically broke through a few key levels. And now I think we're trying to find our footing and decide on the next move. Of course, the irrational reaction to inflation data is humorous at best. Right? Bitcoin is known as a great inflation hedge. And then every time that they admit that inflation is a problem, Bitcoin drops, right? Because then there's the fear that the Fed is going to become more hawkish, deal with inflation. And then, of course, assets like Bitcoin could theoretically drop. It's a big dog and pony show, frankly. And I think that when we realize that inflation is indeed out of control, that's a good thing for Bitcoin.
You know, what's interesting is that we don't see we kind of see these short moves, these short bursts of it, but it doesn't last too long. And, you know, I kind of want to step back for a second here. We had some potential news coming out that, and that was broken on CoinDesk, that BlackRock might be offering crypto trading on Aladdin and support for trading on Aladdin, which for fund managers, for asset managers, this is kind of a big thing. Yet we didn't see any kind of reaction from the markets, and there's kind of not been that kind of chatter other than from hedge fund managers. I texted me saying, hey, wow, this is big. So what exactly is going on? Is there a disconnect, or are we who are kind of used to the institutional aspect of crypto trading, are we kind of like out of touch with reality?
I don't think we're out of touch. I think that now good news has become sort of part of the narrative, and it's expected, and a mature market doesn't react in the same way that it used to when you get that good news. If it was 2017 and you even saw the mention of Bitcoin in a mainstream publication, price would move 15%, right? And now, as you touched on, we just had KPMG add both Bitcoin and Ethereum to their balance sheet. This is a big four accounting firm. Absolutely huge news. BlackRock, the largest asset manager in the world with 10 trillion assets under management, now talking about offering Bitcoin and crypto services to their clients. And we just now say, hey, it's Thursday morning, right? Just another day in the market, another institutional adoption. And I think we know that, you know, the fire is under everyone's feet now. If you're not in, you're certainly under pressure if you're at one of these companies to at least have an understanding or a plan for crypto. And even a year ago, I actually think that was a far-fetched idea. To think about where we've come since the lows in 2020, it's really astounding.
So in terms of direction, short term, at least in the next 3 months compared to the next 6 months, where do you see the crypto markets heading?
Up, and up, right? I don't really have fears of a crypto winter. I think that it's hyperbolic. I think that people have PTSD about every single time that price drops because we get new entrants who aren't familiar with the volatility of this market. People have the memories of goldfish. They forget that last May, just 8 months ago, price went from 60 to 30,000 in 10 days. Right? And now we act like we've never been here before when we see the standard 55% drawdown, which is classic in this market. If you look at any of the metrics outside of our human emotions and the need to not lose money and be wrong, everything points to up. everything. We saw $30 billion of venture capital pouring into the crypto space just last year, and have probably seen another 10 billion just in January, right? All of the money is invested in this space. Everybody's trying to come up with a plan. Whether that means they buy Bitcoin on their balance sheet, maybe not. Maybe it means venture capital and Web3 and taking the picks and shovels approach, investing in exchanges, investing in platforms. But the sheer amount of money and interest that's coming into this space does not point to 3 years of winter.
Scott, I just want to return to the inflation question for a moment, because as you rightly pointed out, everyone's always talking about Bitcoin as being this inflation hedge, but then inflation numbers come out and, Bitcoin doesn't act the way it's supposed to. And also, this hypothesis hasn't even really been tested, at least in the United States, right? The United States, for basically the entire span of Bitcoin's lifetime, has had very low inflation, or negligible inflation. And now, finally we're seeing real inflation, and Bitcoin is just not reacting the way that people expect. So, is this whole narrative of Bitcoin as an inflation hedge? Is there any there to it? I mean, we have no evidence really, at least here in the US, that this is a thing.
I agree that as of right now, we don't have evidence. The price of Bitcoin is roughly the same as it was a year ago, but it's a nascent inflation hedge. The concept is really what matters. It is a proven deflationary asset. We know exactly how many Bitcoin will be, when they will hit, how many Bitcoin will be mined, when they will hit the market. So it will act as an inflation hedge. I think that the problem is that people can't judge an inflation hedge in an hour, right? And I went on Fox Business. I've had this conversation before. If price drops over an hour because humans have an emotional reaction, that does not prove that something is not an inflation hedge. Call me in 10 years and we'll see if Bitcoin is up as an inflation hedge. So I think you have to take a much longer zoomed out view to approach it. And if you look back to March 2020, when Bitcoin bottomed and the stock market bottomed, right? We had Bitcoin under 4,000. The stock market has doubled since we've seen that period of historic money printing, right? Everybody knows the meme. 40% of all money ever printed has been printed in the last 18 months, right? We all know that. Bitcoin went up 17 times from the bottom, 3,800 to about 69,000. The stock market doubled. So if you zoom out and look at when the problem started, when inflation started to become an issue, Bitcoin has performed exceptionally well. It's still up over 10 times since then.
Scott, I kind of want to get back to this whole idea of an inflation hedge, but being on the balance sheet, because this is something that has come up over the past year with MicroStrategy putting Bitcoin on its balance sheet instead of returning the cash to shareholders and letting them decide how much they want to allocate to Bitcoin. Do you think that the MicroStrategy experience, where the stock has languished, if not fallen a little bit since this whole thing started, do you think that might spook other companies from taking on that on their balance sheet, or maybe causing them to say, you know what, this strategy of MicroStrategy is not exactly a great idea. We should be paying back shareholders with dividends. We should be paying back shareholders the cash if we can't find better use for it than either investing it in the company or what have you.
I think there's quite a bit to parse there, right? The notion that MicroStrategy has dropped because of its Bitcoin investment is a false narrative, right? The price of MicroStrategy was around $115, $120. It's multiple times that now, even after seeing that pump all the way to over 1,000. We're talking about a business software company that was growing at a 5 to 6% rate. It was great company, but certainly wasn't seeing, 6, 7, 10x growth. So I think that narrative is false. I think MicroStrategy has done exceptionally well. Also, they offered people a buyout at a premium who were not on board with the Bitcoin narrative. I've talked to Michael Saylor about this on my podcast. His claim is basically that anyone who's still there is on board with the Bitcoin narrative. So there's not angry shareholders anymore, right? They've had their chances to get out at a massive profit because of this.
Speaking of entities, large entities holding large sums of Bitcoin, the U.S. government, the Department of Justice now has seized $3.6 billion worth of Bitcoin. And I wonder, what do you think the impact on price could be? Because now the government is holding it. If they ended up returning it and selling it off, it could have some downward pressure on the price. But what are your thoughts?
We see multiple billion-dollar volume on individual exchanges in a day in the market now. We're talking about a $2 trillion market. I think that $3.6 billion is a drop in the bucket, so that's not a concern. I also think the sort of concept, although it was championed by Saylor, who I love, that the United States still now has Bitcoin on the balance sheet is a bit nonsensical and kind of just a joke, right? Obviously, it's not theirs. They seized it. They will probably return it to Bitfinex. By the way, this would turn out to be the greatest trade in Bitfinex history, right? They were hacked for effectively $70 million, paid that back over time, which effectively seems like a loan, and now will likely get a full reimbursement of $3.6 billion at the end of that transaction. We always like to joke that the best thing you can do with your Bitcoin is probably either die and hand it to your kids, or just forget that it exists or get locked out of your fund, because the longer you take to get it back, the better it will perform. And that seems to be the case here. But I don't think that this will have any discernible effect on the market. If anything, the narrative to me surrounding this is that Bitcoin is really, really a crappy asset for criminals, right? And that every time criminals seem to try to use Bitcoin, either they get caught, or they don't get caught, but never are able to use or access those funds or cash them out, right? And so I think that this definitely puts one more major nail in the coffin of the Bitcoin is only for criminals argument.